Hello, hello, hello. Greetings, everyone. It's 12:30 and you and I have an appointment. That's right. It's time for Discussing with Drake. And today is episode number 41. Can you believe it? So it looks like 14 to you or 41, so I'm not sure which way you can see it. Anyways, today's topic is going to be how much should a down payment be? But before we get started, keep in mind if you ever miss a live episode, all you guys do is simply go to YouTube and type in Drake's Real Estate TV and hit subscribe. And I'd appreciate that. So how about we get started? Hey, so what do you think about the new background today? So obviously, I'm still up at Haven House. I didn't get back down yet, but welcome to life at 5,800 feet. It's pretty wide outside still, so yeah. Anyways, if you're planning to buy a new house with me, a big part is that you're saving for a down payment, right? So your down payment is the money that you're putting down when you close on a mortgage. So lenders often will describe down payments in terms of percentages. So a down payment represents what you initially own when you buy a home. Then the remainder comes from your lender. So standard is often referred to as 20% down, but is that reality? Well, putting 20% down may make you feel like ownership isn't attainable for you, right? Because not everybody has 20% down. But is it really truly what you have to or should pay? So I'm going to give you a few considerations to keep in mind for your down payment. So here are some benefits of putting 20% down. If you can put 20% down, obviously there are benefits. First, you don't have to pay for PMI, which stands for private mortgage insurance. So PMI is actually a form of protection for your lender if you default on your mortgage. Okay, if you don't put 20% down, but you reach a certain amount of equity, your lender actually can remove your PMI from your loan, but you do have to request that. That doesn't happen automatically. So if you have questions about that because you're already a homeowner, contact me and we can talk about that more. And of course, the more you can put down on a mortgage, the better the interest rates you're likely to get. Because in this world, it's kind of like the better you have, the less you need, and kind of vice versa. So if you've got bad credit, you're going to need more. Anyways, the more money that you pay as a down payment, the less of a risk the lender is going to see you as. Therefore, the more attractive the terms are likely to be. So if you were to put 20% down and get an interest rate that was, for example, 2 points lower, then you would have saved $1,000 over the life of your loan. However, the bigger your down payment, the smaller your monthly payments. This is scale, right? So right now, despite the economic downturn caused by our lovely COVID, the real estate market remains very competitive, and a larger down payment can also make you more compelling in the eyes of the seller. And if you're buying in a hot market, that's important. And let me tell you, are we in a hot market or what? It's really, really, really quite insane, to be put honest. This is my 21st year, and this is about the most hostile I've seen it out there. It's crazy. So let's talk. The downsides of putting 20% down. Well, not every lender is going to require that you put 20% down, and there are downsides to a larger down payment. One is that you're taking more of a financial risk, but you're also giving yourself less of an emergency fund if something unexpected happens, which can be a scary thought for some buyers. But you're leaving yourself with less money for any repairs or updates that you might need to buy. And as you know, it can take years to save for a 20% down. So can you buy a home without a down payment? Of course you can. Okay, it's actually possible to buy a home with no down payment, but only with a government-backed loan. So the government issues these loans, so they pose less risk to a lender. So the most popular one, of course, is the VA loan. VA, Homes for Heroes, that's me. So VA loans are available to service members and veterans, and as well as some surviving spouses. And, I specialize in everything VA, so you should be giving me a call, right? Well, does the type of loan matter? Well, when you're thinking about how much of a down payment you'll need, the type of loan actually that you're likely to get is going to be important. So a conventional loan for a primary residence leaves the down payment requirements really up to the specific lender. So you can find some lenders that require as little as 3% down for a conventional. There's 3, 5, 10. I mean, it's endless. So some lenders will offer lower down payments options for more qualified buyers. With an FHA loan, a down payment of at least 3.5% is required, and you need a credit score of at least 580. If your credit score is lower, you're going to have to put at least 10% down. Okay, so what all this means for potential buyers is that there are pros and cons to the traditional 20% down guideline. You just need to find out what works for you financially and then shop around for loans that meet your needs. So not being able to make a 20% down payment doesn't automatically count you out of buying a home. If you're confused, just call me, okay? There are so many other loan options out there that we haven't even touched on because I don't have all that much time, right? And you're not going to stay here for an hour listening to me. So if you'd like a consultation with one of my outstanding lenders, just reach out and I'll introduce you to one of them. So that's all I'm giving you for today. I hope you found it useful. I want to give a shout out to Realtor.com for all the information that they provided me today. And remember, don't keep me a secret. Share me with people that you know. And if there's a topic that you would like me to discuss in the future, I can get on the calendar. You just got to let me know what you want to hear about. All right. So I want you to have a fantastic week. I want you to be kind to one another. Don't forget to live, laugh, and love. And until next week, when we see each other, when the next move matters, contact Drake for Homes. Thanks, everyone. See you later.